everyone. I'm Maxime Bonneville, and I will be, oh, hello. I hope everyone is hearing me well. I will be the consultant in charge of the presentation of the topic of the day. As we mentioned before, this presentation will be short and followed by a Q&A. Jean-Claude Pierrier is my collaborator, and you can ask questions anytime in the Q&A chat, and we will answer them after this short presentation. So welcome. I hope you and your loved ones are well in this time of plague. I will proceed immediately to our topic, abnormally low tenders in a changing donor environment. So allow me to share a little presentation with you. There you go. Okay, so our topic of the day. Let's start with a business case. The best way to illustrate abnormally low tender is to discuss a real one. So imagine the following scenario. You are a member of an evaluation committee for the procurement of a power plant, and you have received the following bids, 5 bids. The first 3 are in green because they are responsive. The last 2, so number 4 and 5, are in red because they are non-responsive. That means they did not meet your technical or administrative requirements, so you are uninterested in the offer no matter the price because it doesn't meet your needs. Number 1, 2, 3, so are the ones that are responsive. Your procurement plan estimate was $1 million US. And as you can see, the amounts in US dollar have been listed for every bid. For example, Siemens is 1.2 million US dollars. So look at this a little bit, and I will ask you the first survey question. You'll get a pop-up for your survey. I would ask every participant to please answer the question. How would you describe the situation presented? You have 5 choices. You'll shortly see this pop up as a survey question. So let's leave you a little bit of time to answer. Excellent. I see some people are answering. Very good. We're progressing. I'll leave a little time to those that have not answered it yet, and then we'll close it. Okay, so let us end the polling. As you can see from the results, many people have told me that the situation is absolutely normal according to the procedures. Some have identified it as collusion, some none as misprocurement, 2 as fraud, and 2 as abnormally low tender. First thing first, it is possible that there's a case of collusion, misprocurement, or fraud here, but we cannot know that from the data you've been given. What we can know is that the situation is not absolutely normal. We are in an abnormally low tender situation. I will explain why later. It's normal if you made a mistake. Of course, the people that answered abnormally low tender maybe don't know why. They just know that the name of this webinar is abnormally low tender, so they answered that. But I'll try to situate you to let you know why this is the specific situation. So let me just close polling. First, what's an abnormally low tender? The picture you see here on your screen is of a 4-leaf clover. Now, I know in some of your countries you do not have clovers, but usually clovers come with 3 leaves. However, four-leaf clover do exist. They're exceptionally rare. They're a genetic mutation, and they are reputed to bring good luck if they are found in a field of clovers. This is mainly a myth in Great Britain, especially in Ireland. So a four-leaf clover is not legendary. It's not something that does not exist, but it is quite rare. In other words, certain things that you will see as abnormally low tender are just exceptionally good deals. They meet all your technical requirements. They meet all your administrative requirements. The price is merely exceptionally low, which is great. I don't want to pay a lot of money for things. I'd rather pay less money. I like keeping my money. However, just like four-leaf clovers, these type of deals are quite rare. Very often, if it sounds like too good a deal, it is. So this is why I'll show you a process where you don't automatically reject bids because they might be a four-leaf clover, but you investigate and see if it is merely an excellent deal or if there's a problem somewhere. So this is why the four-leaf clover was here. So what is an abnormally low tender? Okay, there's a definition you can see, but the point you have to understand is you are in a new context with the reform going on at major donors like the World Bank. We call this the new Procurement Framework. And the goal is now to balance price with other attributes such as risk, such as technical requirements. In this new environment, an abnormally low tender is one where the bid or proposal price, in combination with other elements of the bid proposal, appears so low to the extent that it raises material concerns with the borrower as to the capability of the bidder or proposer to perform the contract for the offered price. In other words, you don't merely look at price. You're in a new context where you look at other characteristics and contrast it with the price. You're looking for the most advantageous bid, and it might not be the lowest priced one. So an abnormally low tender is what you've just read here, but we'll go through a 5-step process to see how to really identify and then treat them. No automatic rejection, no automatic acceptance. I'll show you this 5-step process. First, a little survey question, the second one. Question is, are you familiar with the abnormally low tender evaluation process? And you can select more than one applicable choice. So here's the survey. I'll leave you 1 minute to fill it. I just want to know what you've done before, what you've been trained on, to see where we proceed with this presentation. Okay, I see people are answering. It's good. So let's leave you a little bit of time. Okay, enough. Well, as you can see by the result, the biggest, let's say, weakness or the biggest role for improvement lies in the third option. I am familiar with the World Bank new approach. Well, that is quite good because I will be showing you the new approach. So excellent. But I see that a lot of people have done this, have faced this situation using their own national procurement rules. And that is good because you will have a point of reference to compare with the new World Bank approach. Or maybe some of you are familiar with the European Union approach or the African Development Bank, Asian Development Bank. Okay, so let us go back to our presentation. First, you'll notice in my presentation that for every step, for example, we're with the first step, for responsive bids only, you identify, you'll have a picture of something that symbolizes the main action. So you might not know who the gentleman with the long hair is. He's called Sir Isaac Newton. He lived quite a while ago, and he was one of the foremost mathematicians of his time, of all times. He discovered the theory of gravity according to an apocryphal story while having an apple fall on his head while he was napping under a tree. Now, that's not important. The point being, he was a great mathematician. This methodology will require some mathematical skills, but nowhere near the skills needed to be Isaac Newton. We're talking about very easy mathematics. So let me illustrate that. You had 5 bids, but only 3 of them were responsive. You only look at those when you're identifying potentially abnormally low tender. The first step is mandatory for every evaluation. It's not optional, you have to do it. So the 3 bids that were responsive were Power Corps, 1,050,000, Bechtel, 650,000, and Siemens, 1.2 million, all in US dollar. How do you know something is an abnormally low tender? You start with your cost estimate. In this case, $1 million US. This is what was found in your procurement plan and approved by a donor if you're dealing with World Bank. A bid 20% or more under your cost estimate constitutes something that may be an abnormally low tender, so must be investigated. The first step is identifying. Any bid under $800,000 in our case here is potentially an abnormally low tender. So you have these 3 bids. Let's ask you a question to see if you're following. Which of the 3 responsive bids is an abnormally low tender? So you have 4 options. Let's leave you a little bit of time to answer. The first step is purely mathematical. Responsive bids, then you compare to the threshold, which is under $800,000, 20% less than your procurement plan budgetary estimate. Okay, I'll leave you a couple more seconds. Now we have the results. Well, it will appear most people have answered it correctly. Bechtel presented an abnormally low tender, 650,000 is under 800,000. The other one, Power Corps, is over your estimate, just slightly. Your estimate is 1 million. And Siemens is quite over, but that's irrelevant. So the correct answer was Bechtel. The second step, so for those identified as abnormally low tender, is called clarify. What is the picture on the right? It is a painting of a scribe. Why? Because the second step is to craft a carefully worded and well-targeted letter, an official letter prepared by the bid evaluation committee and sent to Bechtel. Why Bechtel? Because they are the one firm that was identified as potentially abnormally low. So what you did in this case is you focus on what in the bid exactly seems to be underpriced compared to your engineering's estimate. And in that case, let's say it was civil engineering, the civil engineering parts of this power plant construction. As you no doubt understand, a power plant construction requires different kinds of engineering. So the civil engineering part seems to be undercosted. Why? Because the engineering estimate that you use to prepare your overall estimate is $600,000, while the Bechtel bid is only $300,000. So you write to them, you target the areas that seem problematic, that seem to have created the abnormally low tender, and you ask them to justify. You're the scribe, you prepare a carefully worded letter, you send it to them, you give them an amount of time to answer, and you do not discard them. You wait for their answer, because the next step is, justify. What do you see on the picture? You see barrister, probably Queen's Counsel, preparing to argue a case with all their documentation. Now, do you justify? No, Bechtel has to justify. They received your correspondence, they answer it. So Bechtel prepares something in writing. For example, they might say, okay, here's a complete compilation of all the costs that we use to prepare our estimate for civil engineering. They provide this cost, and let's say they've only counted direct costs. That means they did not include costs for supervision and costs for headquarters. That's what they put in their answer. Supervision, to give you an idea, would be the engineering team on site overseeing the overall work site for the construction company. Headquarters is everything having to do with the company itself and its profit, its risk margin, so on and so forth. These are all costs that any construction company normally includes when preparing a bid. Another justification that they provide is they say, we have an existing active work site nearby, so our deployment cost would be lower because we already have machinery, materials, and even supervision teams in the surrounding area, so we will have lower deployment costs than other firms. So they write back to you, in other words, arguing their case. They're lawyers, they're barristers. So that was this step. Next step, sorry. Fourth step, you are the investigator, you verify the information provided. So I've used the image, very famous, of Sherlock Holmes, the most well-known investigator. Why did I use that? Because that's your job now. You could, for example, visit the work site mentioned in their correspondence and talk to people involved. And then if you do that, maybe you find out that they use different machinery. It's not the same kind of engineering. You don't see how there can be a synergy here. You also examine the cost structure provided, and you find out that they have not costed anything in the civil engineering part for on-site supervision, and there's nothing about headquarters, about profits, so on and so forth. You also find out that you have no prior similar contract with Bechtel. A very specific case, and I'm normally low tender, is if they've done the same job before for the same price before, maybe it's not an abnormally low tender, they prove that they could do this, they've delivered to your satisfaction, well, take the good deal that comes to you once again, don't reject it. But that's not the case here. They haven't constructed a very similar PowerPoint for you last year for a very similar price. So you don't have that reassurance. So that's your situation. You verify, you look at these data points, and you move to the next phase. You are the jury, you decide. The last step is deciding if you accept or reject. So let me ask you the final polling question. Accept or reject Bechtel's bid. You have three options. I'll leave you 1 minute. Don't worry, it's a business case, it's not reality. You can make mistakes, don't hesitate. We all learn from them. Okay, couple more time, sorry. 10 seconds. Oh, finished. Oh, everyone has answered. Thank you. So we had three choices. Majority of people put no, too risky, and that's the correct answer. Let me explain why. First, accept but increase the performance security would be interesting. 45 people have answered that. However, it is not allowed in the new procurement framework to do that. You either accept or reject. You can increase the performance security, so in between measure for unbalanced bid. If you don't know what unbalanced bids are, don't hesitate to ask a question. I will answer it though very quickly because that's not our main topic. In the typical way of doing things now, you either accept or reject. So you did not have that option. It would have been interesting, but that's not a given option. You should not accept the bid because they have not justified why they don't cost supervision, they don't cost profit. And the NERBI work site doesn't seem to be using the same materials, the same supervision team, the same type of engineering. So I don't see how they can have any synergy. So the correct answer was no, it is too risky. I hope this very short business case has helped illustrate what's an abnormally low tender, but we will now move on to the most interesting, let's say, situation, that is questions and answer. So let me just stop sharing my screen and allow you to proceed with question and answer. I believe Jean-Claude should be starting with that.
Hey, good morning or good afternoon, everyone. I'm Jean-Claude. I'm a consultant also at SETYM. Okay, I'm going to moderate the question and to redirect them if necessary. There is a first question for you, Maxime.
Yes.
Someone is asking if when there is an abnormally low tender, is it necessary to address a letter to all the bidders or only for clarification to Bechtel in that situation?
Very good question. You only send a letter to the concerned party, that is Bechtel. The other party, it's during evaluation. So any other party is not to be informed that you are dealing with an abnormally low tender or potentially abnormally low tender situation. Only the concerned company has to justify its pricing, and it's between you and the company. It's not public information at this point.
Okay, thank you so much. Iga, I think it answers your question. Is there any other question here?
Don't hesitate.
Yes, here it is. What if the company had done a similar project for a different client under the same circumstances? This is asked by Chester James.
Well, Mr. James, that is a very good question because it's an important point. You don't have to have been the previous client. If you can find proper reference from a trusted source and you have all the available information showing that it was, let's say, the same approach, A, and B, the same pricing. Of course, if they've done a similar work in the past, but for twice the price, that's not interesting. But if they've done similar work for, let's say, another part of government or not necessarily you yourself, your ministry or your project or your organization, and you can obtain all the necessary information. It's a trusted source and you confirm it. It is a very, very good point in their favor and should help you decide that this is a four-leaf clover. You're just getting a good deal. I hope that answers the question. Any other questions? Anyone has a question?
Wait a minute. Yes, there is a question by Muhammad Abul Kauser. Is it the only way to identify ALT using percentage of cost estimate, or there are other ways?
Very good question. I've used a small example, but you have to know a few things. First, I've used World Bank, new procurement framework. Different donors might use different percentage of methodology. Some use 15% and make the rejection automatic. These are all ways of doing things. New ways tend to be like this. And another data point with the new procurement framework, if you have 5 or more responsive bids, you will use a different methodology. I've prepared a more elaborate presentation, and I have also included the World Bank guide on the topic, and we will send you these 2 documents after the presentation so that you can explore all the details. You can find out all the details that you need on this topic. Basically, if you have 5 and more responsive bids, it will not be relative to your estimate, but relative to all the other bids. You will use one standard deviation under the average as the reference point. If you're already did mathematics like standard deviation, you know exactly what it means. Otherwise, look at my presentation that I'll send. It will be illustrated with an example.
Okay, Maxime, thank you. There is another question by Mr. Andrew Onyenakwe. I hope I pronounce well the name. Assuming Bechtel is able to provide some good justification, will you take it, be a good deal and accept it? And,
yes, that's
and Andrew is adding something. I have personally seen situation where justifications are provided, but the bidder is not able to perform when the contract is awarded?
Well, there's always a risk with a contract, but if they can provide a proper justification. Now, as I said, let me highlight something. You remember when I said verify and I showed you Sherlock Holmes, so an investigator, you don't accept what they say at face value. If you feel you need, for example, this is why I said, oh, you go to the neighboring work site and you actually check it out, physically sending an engineering expert in that case. What was I trying to make you understand? I was trying to make you understand that you don't accept what they tell you at face value. You investigate the situation. Now, I won't lie to you. There's always a risk in any sort of contract, but you should do due diligence before signing with these people. You don't just receive a letter and say, oh, well, they just said that they don't intend to make profit and they get really good deal on concrete. Well, I need proof. I need to investigate. I need to exert judgment. I need to be Sherlock Holmes. I need to be an investigator.
There is a question by Mr. Khalid Mohammed. Can we use the engineer estimate as a cutoff line and reject everything below it?
No. The engineering estimate is a reference point. The rule is 20% below is something you investigate. Not 20% below is fine. There's always price variation. You don't reject anything outright with the World Bank New Procurement Framework. There are certain donors where what you just said is true. You automatically reject, right? Certain donors or certain national administration proceed like that. I would advise any donor or national administration that automatically reject four-leaf clovers to stop doing that. It's not the proper, it's not the good practice. It's a pretty good practice because it's risk protection, but you can improve it by making the effort to investigate and sometimes ending up signing with this four-leaf clover because it wasn't fraud, it wasn't mispricing, it wasn't a mistake, it was just a really good deal. Sometimes. I will easily admit that most of the time it's not a really good deal, it's a risky and problematic situation. What I'm saying is investigate, it might just be a good deal.
Okay, Maxime.
20% under is fine.
Okay, so thank you, Maxime. I got a question and he would like to talk to you. I'm going to give him the
Perfect.
to allow him to talk. It's Mr. Dr. Rahman. Sorry. Okay, I let him ask the question. Yes, please. Mr. Oops. Oh, your microphone is mute. Can you unmute? All right.
Hello. Yeah. Hello, Maxime. Hello.
Hello.
Hello. How are you?
Hello. I am well. But how are you?
Very
Hello?
fine. Thank you.
Okay. Thank you. I have a question. This is in Bangladesh. If the abnormally bidder low cost for the estimated cost, we accept this bidder, but performance security increased 25% according to PPA, Public Procurement Act in 2006 in Bangladesh. Okay.
Yes. So,
yeah.
What is the question? You want me to comment on that practice or?
Yeah. That's my question. That's my question. If we accept the abnormally low cost for the bidder, that's increase the performance security at 20%. Okay,
yes.
in Bangladesh practice.
Okay. Well, what happens with World Bank, what they're doing now is they don't do this for abnormally low. However, for unbalanced bid, they very often use a very similar practice to Bangladesh. They improve the performance security, figuring that it would be enough protection. So in some cases, donors have similar practices to the PPA in Bangladesh, of which I was familiar with a few years ago, but less now, where you protect it. In other words, it's not exactly what I'm presenting here because I'm focusing on New Procurement Framework World Bank, but it's not a unique practice. It's not something unexpected what is happening in Bangladesh. However, I would advise if there's any revision to consider that there are certain bids that it's not about the performance security. The bid should be rejected. These people are will be problematic, won't complete, for example, the work site, won't deliver the goods. In other words, it would be great if the evaluation committee in Bangladesh has sometimes the option of saying, this is too dangerous, even with the performance security, we are not comfortable with accepting this bid. We will take the second lowest evaluated bidder, for example.
Okay, thanks, Maxime. This is the practice only used for the revenue budget, but we have the new World Bank procurement frame. We will not accept this. This will directly reject it at this abnormally bidder. Okay.
Okay. Well, good contribution. Thank you.
Yeah. Thank you.
Okay.
Thanks to everyone.
Thank you, Mr. Rahman. I got another question by Danraj Perso. It's a follow-up on Gumede's question, and the question is like this. In a transparent process, all bidders should be aware of all action taken by the client in respect of bids. Actually, so it's a different point of view. What do you think, Maxime?
First, transparency in any situation, any process. When we say our process is transparent, it's a oversimplification. What happens is our process is transparent at certain points, but during evaluation, during the actual evaluation of the bid, our process is not transparent. It's confidential. Okay. We have, of course, but to highlight certain points that could satisfy the person asking the question, the bids were read aloud. Somebody knows that someone bid lower. In other words, it's known information. That's A. B, there will be a bid evaluation report. There was a bid opening. So before and after, sure, you can have information. But during bid evaluation, that's not the place to do that. A. B, certain information, and in updated donor rules, they've now become more aware of that. Certain information is protected business secret. So certain things about pricing. My opponents don't need to know my profit. So if I'm writing to Bechtel saying, please justify your pricing, showing me how much you're paying for this, how much you're paying for supervision, they're giving you privileged business information. They don't want to see this shared with everyone. They would just refuse to answer if they knew this would become public. I would personally advise any, for example, engineering firm, that situation, being asked that question, that if they think this will become public, they should not answer, they should just lose the bid. That would be my personal consulting advice. And I would have absolutely no qualms in saying that. Certain information is not to be shared. However, you are right, transparency is important. It's important before and after the evaluation, not during. No one in your organization or no one amongst the bidders or no one in civil society can come and ask the evaluators, okay, so who is winning? What are you doing? They're probably trying to influence the process, and that's not proper. I hope that answers the question.
Okay, Maxime. Well, then I guess it answers also the next point by the same person, Dan Raj, who was thinking that the process, the evaluation process, could become arbitrary. But I think you've clarified that quite well. There is another question by Mr. Wasiu or Mrs. Sorry, Wasiu Showelly. I don't remember the name of the awarded bidder, the ALT Burkest. Can Burkest, sensing the reason for the letter, resubmit its bid by upping it? So is it possible for a bidder to change the amount of the bid?
Very good question. You can never change your bid. Okay, any situation, just start, when you're thinking of procurement, in any situation, start with the principle that the bids will never change. What you got is what you have. So let's say you're correcting arithmetical mistakes, so very different than abnormally low tender. You send them a letter saying, I've done the following correction, following the rules announced in my bidding document. Do you accept or reject? If they accept, they're still in the race. If they reject, they are not. But they don't have the option of saying, no, I meant 200,000, not 100,000. Same with abnormally low tender. I cannot say, I forgot to put this cost. No, your bid is your bid, and that's it. No change. Because I've heard the other bids read aloud. So if you ask me, oh, did you bid 1 million or 800,000? I won't answer you truthfully. I'll just look at the other bids and answer you according to my own self-interest as an entrepreneur looking to make money no matter what.
Okay. Did you finish, Maxime?
Answering that question, yes, I did.
Yeah. Okay, there is a question by Mr. George Asante. Can we use the profit margin as part of the evaluation process in this case? Which I'm not sure I understand really. Do you mean there could be a low profit margin? So please, Maxime, do you understand better?
Okay, whenever you are, from the point of view of a firm, preparing a bid, what you are doing in reality, especially if it's a complex bid like in engineering. The example I've used is engineering. Maybe I'll answer a question that hasn't been asked before. Okay, but before answering this one, I just realized abnormally low tenders can be used only for goods, works, and non-consulting services, right? Not for consultants, but it's not only for engineering. It could be for goods, it could be for technical services. The only case where the abnormally low tender rules does not apply is for consulting services because the cost is already part of the evaluation with percentages and so on and so forth, and you're evaluating quality. Okay, so with that being said, in engineering, what you do when you're looking at, you're preparing a bid is you look at your direct costs. That is cost of the people working on an activity, cost of the equipment used in that activity, cost of the materials. That's from an engineering firm or a construction firm point of view, that's their cost, not their profit. To that, you add the cost of supervision on site. That's all your team, your supervising team on the site. So that's a lot of cost. You add, of course, the cost of everything, but you also add the cost of what we call headquarters. Within the cost of headquarters, you have a variety of elements. And one of them is profit, but the other one is just merely keeping it functioning. You need to pepper that on all your clients. Otherwise, you are losing money. Literally, a firm that only takes into account direct costs and supervision costs is losing money every time they're performing a contract because they still have to pay for their headquarters, and that is what clients pay for also. So within that headquarter cost, you have your profit. I think I will add a document to the document being sent, which is a sheet detailing all costs for a line in a typical engineering contract, and that will allow you to see the different kind of costs. And what you should do is send this sheet to, it's an Excel spreadsheet, to a client, to a bidder, and ask them to justify specific lines or elements of their plan filling that sheet. So I'll provide you something to help guide you, okay? I'm taking a note down.
Okay, so it's the cost breakdown. There is a question by Mr. Muhammad Abul Kauser asking about the audit team. And he mentions that in Bangladesh, they have a problem with that because with this audit team, they cannot reject a technically responsive bid, whatever the price, I understand. What is your opinion on this?
Well, okay, first, an audit team, I'm assuming accounting audit, is looking for compliance. So audit team, in other words, I don't really care about the opinion of the audit team. What I care about is that hopefully they're applying and looking for conformity with the rules. If they're doing that, basically what you're telling me is in Bangladesh, we cannot reject a bid according to our procurement rules, probably the most recent PPA. Well, the thing is, if you're using outside funds in the financing agreement, would say you're using donor rules, but if you're applying your own national rules, I'm sorry to say that unless you can prove fraud or corruption, because that's different, right? It's a problem in itself. You have to apply your national rules. Now, I would check the PPA to make sure that is really the case. Sometimes auditing teams, not being procurement experts, will make mistakes when it comes to the rule. That's probably not the case here, but I would check the rule, see if that's the rule. If that's the rule, I'm sorry to say you have to apply what's in the procurement, the PPA, when using a Bangladeshi fund. I don't get to decide. It's not my money, it's the government's money, right?
Okay, Maxime, there is a question by Magalhães Miguel. I have a financial proposal in which the value of overheads was over 135%. What is an acceptable percentage of these costs?
Overhead costs of 135. Okay, first, it depends on it varies widely per industry and per type of work. I cannot give you a general rule. But if you think about it, in the Western world, when you make 20% of profit on your activity, it's kind of suspect. And then I see some construction contracts. In certain cases, it's flabbergasting. It's the amount of profit versus the service or the work provided is shocking. Now, I cannot provide you with a percentage. First, it's usually not worded in percentage, but in multiplier, because in most industry, that's how it's done. I'll send you a sheet, but it really depends. We are offering a technical assistance service, if I may advertise it, where it's not really, it's basically you can email us question and someone like me will be happy to answer. That's exactly the kind of question. So if you send me a specific example and you explain it's in that industry and that type of thing, I may be able to answer it and tell you, well, the usual profit is more 15%. So if they're at 70%, you should start asking yourself a question. Why are they winning? But one thing though, price is part of the evaluation. So if they have a very high profit, wouldn't they be discarded by itself unless there's collusion, unless you don't get the right bid? So the problem might be elsewhere. But yes, a very, very high profit margin is shocking.
Okay, thank you, Maxime. There is a question here by Amadou Salah. Dear Maxime, do you hold on the procurement process until you clarify with the low abnormal bidder before proceeding to the next procurement stage, assuming her company was among the responsive bidders?
You do, but you announce a certain delay. You say you have 5, okay, it depends if they're, if it's for national bidders only, you will assume that they're nearer, it's easier for exchanging letters. You will give them 5 days, but 5 open days. But if they are from outside, if it was an international bid, you will give them 10 days to answer you. If they haven't answered you within that time frame, they are automatically rejected because they haven't justified, they haven't argued their case, they haven't been the right barristers. However, in any case, when you reject a bid, you don't take their bid security because there was a value judgment on part of the evaluation committee. So yes, you give them a time frame, but within that time frame, you wait for their answer. 10 open days. In the guide that I will send, you'll see the amount of days. I just didn't want to go into all kinds of scenarios, but you announce in your own letter, you have 7 days to answer this, you have 5 days, so on and so forth.
Okay, Maxime, another question by Dan Raj. Is it a requirement in the new World Bank guidelines that an inquiry from ALT bidders be done? I think you already answered that, but the answer is?
Yes.
Yes.
The process is mandatory. In other words, it's not about your feelings. You start with the math. Anything identified by these calculations as abnormally low tender potentially requires you to go to the next step, which is prepare correspondence and send it to them, asking them questions. It's mandatory now.
Okay. Okay. There is a question about the contract management per se. I mean, it's a question by Selwyn. Is if a bid, an ALT bid is accepted, then, and during the execution, the contractor is seeking a variation, should there be an approval granted on this variation?
No. For what? Generally speaking, unless you are the administration, are responsible for the delays, you apply what's in your contract. If there's any sort of remedial contract adjustment in the clauses, of course you apply them. But if there are not, if the situation does not warrant a change in pricing, it is not owed to them. You know, they're not owed more money than what they offer to do the job for. You are not running a charity. You are the government doing business with private companies. They should have thought of their profit earlier. Now, there are some, if you're very familiar with contractual clauses, you will know that in some cases, because it's your responsibility, because it's due to your action, so on and so forth, there might be some clauses that apply that will change the pricing. But the general answer to your question is you don't owe them a price adjustment out of the kindness of your own heart. So unless there's a clause that applies, they bid low, you check, you wrote to them, you told them, this is quite low, please justify. They justify, they have to live with their choice.
Okay, thank you, Maxime. There is a question here about, again, by Magales Miguel. And I think the question is the ALT applying to consultants' services? I think this is the question, isn't it, Magales? Maybe you can tell me if it's the right question. So, can you apply all the methodology to consulting services?
No, you're only applying to goods, works, and non-consulting services. So what we call technical services, a satellite survey, something that you can write technical specifications for. Consultants already have their price taken into account as a minor factor in the evaluation, the major one being quality. So you will already, if their technical bid, their financial bid doesn't match, it's already a problem. You don't need to use the hard and fast rule of a normally low tender. You've already evaluated the quality. They've already described what they will deliver.
Well, I would maybe moderate this, because in the case of a lowest evaluated bid in a least cost evaluation, which is a possibility with the World Bank, 100% of the evaluation is on the cost almost. So maybe there could be there's some
according to the rules. According to the rules, it is only what I just explained is only to be applied to goods, works, and consulting. Now, what you're saying is quite interesting, though. When it's 100% cost, what do you do? First, when it's 100% cost, it means that you can ask question about the other least cost selection already has certain rules, right?
Okay.
Regarding passing a very high grade for technical quality, if we get into detail. So there's already stringent measures in place to make sure you have received the required quality. It was in a prior step. It's over now. We're only looking at cost. You needed the 85% rate, so technical result, to see your financial open.
Okay, there's a question here which is not really about your presentation. It's by Mr. Dr. Taibur Rahman, asking why don't World Bank use FIDIC contract while EU, the European Union, can use them? I think, Mr. Rahman, there's a mistake here, because actually the FIDIC general condition of contracts are used by the World Bank. They are even in the bidding documents that for construction. So I guess maybe you would want to check that by yourself. Maybe we can discuss that another time, or if you want, you can contact me. I'm going to send you my coordinates. I'm going to skip to Mr. Karen Hernandez question. Or Mrs. Sorry. There was a question about the three possible answers you mentioned, and there was one about increasing the security, the performance security, I guess. And the question is, the right answer was the second one. But yes, I remember Maxime told us that it was possible that the third option is the one also, but in other contexts, competitive bid or something similar. So can you be more precise on that?
Yes, it was a trick question. With the new procurement framework, you only have accept or reject as choices for abnormally low tender. But for what we call front loading or unbalanced bids, you can use this option of upping the performance security. So it's not applicable to abnormally low tender under the new procurement framework. However, it is applicable to front loading. Front loading, I hope everyone knows what it is when the overall price is within the normal range, so it's not abnormally low. But all the costs of activities that come early on in a project, it's in construction always, right, are too high. All the costs that come later are too low. So you're overpaying for early work. So they're getting all their profit early on, then they're losing money for the next part. It's very common strategy in construction, and it's not acceptable. So if they do that, you may opt to up the performance security, but that's another topic. So you can do it in certain cases, not in the case of abnormally low tenders in the new procurement framework. Other donors, different approaches, right?
Okay, thank you very much. Well, look at that. There is a last question, and it's very good because it's almost 11. No, actually, it's not a question. It's more a comment by Magalhães Miguel. You already answered this person about the 135%
Yes.
margin profit, and actually just mentioned that it has been happening to them, and it was very shocking. And
it's extremely shocking. That's
and he's asking you if you are going to be the one to contact if necessary in the following days or weeks.
Oh, yeah. Yes, I can pretty much answer that. No problem. Yes.
We are going to send you the email addresses that you can keep in touch with us. And if we can provide you with technical assistance, you're going to be very welcome. So I think this is ending the Q&A and your presentation. So thank you to everybody for the participation and the question. I think it was a very interesting presentation. Maxime, I let you the final word. Thank you, everyone.
Okay, so I want to thank everyone for being there, for asking questions, for being patient. I know Zoom is not exactly the same as being face-to-face, but we've successfully managed to cover this very interesting topic. You can come back to SETYM for more presentation.